Is the financial world on the brink of a massive shakeup? We're hearing whispers of a trillion-dollar apocalypse, a seismic shift that could dethrone tech giants and put precious metals back on the throne. The headline grabbing everyone's attention: silver is absolutely crushing Nvidia. Yes, you heard that right. The humble gray metal is outperforming one of the biggest names in artificial intelligence. And while all this chaos unfolds, gold remains the undisputed king, the #1 safe haven asset in the world. Stick around, because today we're diving deep into what this means for you, your wallet, and the future of investing. Is this just a temporary blip, or are we witnessing the beginning of a new financial era? Let's break it down. First, let's talk about the giant in the room, Nvidia. For the past few years, Nvidia has been the darling of Wall Street. Its chips are the brains behind the AI revolution, powering everything from chatbots to self-driving cars. The stock went on an unbelievable tear, making early investors incredibly wealthy and becoming a cornerstone of many portfolios. It seemed unstoppable, a symbol of technological progress and the future of the economy. The company's market cap soared into the trillions, a feat only a handful of companies have ever achieved. But as the old saying goes, what goes up must come down. Or at least, it has to face some serious competition. And that's where silver comes in, staging one of the most surprising comebacks we've seen in a long time. For years, silver was seen as gold's less glamorous cousin. But something has fundamentally changed. While Nvidia's stock has been facing volatility, profit-taking, and questions about its sky-high valuation, silver has been quietly surging. On a percentage basis, silver's recent performance has left even the mighty Nvidia in the dust. So what's fueling this incredible rally? It's a perfect storm of factors. First, industrial demand. Silver is a critical component in so many modern technologies. It's in your phone, your laptop, and most importantly, it's essential for the green energy transition. Solar panels, for example, use a significant amount of silver. As the world pushes for more renewable energy, the demand for physical silver is exploding. This isn't just about solar panels either. The electronics industry continues to grow, and silver's unique conductive properties make it irreplaceable in countless applications. Then there's the electric vehicle market. Every EV that rolls off the assembly line contains silver. As governments around the world mandate a shift away from gasoline cars, the demand for silver is set to climb even higher. Unlike tech stocks, which represent a claim on future profits, silver is a physical commodity with real-world tangible uses. This industrial demand creates a solid floor for its price. But that's only half the story. The other half is its role as a monetary metal. For thousands of years, silver has been used as money. It's a store of value, a hedge against inflation and currency debasement. And right now, investors are getting nervous. They see governments printing money like there's no tomorrow, devaluing currencies like the dollar and the euro. They see rising inflation eating away at their savings. In times of economic uncertainty, where do people turn? They turn to hard assets. They turn to things that can't be created out of thin air by a central bank. And that's leading a new wave of investors into silver, not just for its industrial use, but for its historic role as real money. It's seen as a cheaper, more accessible alternative to gold, with potentially more upside due to the dual drivers of investment and industrial demand. This combination is what's causing silver to outperform even the hottest tech stocks like Nvidia. It's a classic case of the physical economy reasserting its importance over the digital one. Now, while silver is having its moment in the sun, let's not forget the king, gold. Gold is, and has always been, the ultimate safe haven asset. It's the bedrock of the global financial system. Central banks around the world hold massive reserves of gold. Why? Because gold is trust. It's the final form of settlement, an asset that carries no counterparty risk. When you hold physical gold, you're not relying on a company's earnings report or a government's promise to pay its debts. You hold an asset that has been valued for millennia across every culture and civilization. In the current environment, gold's role is more critical than ever. We're seeing geopolitical instability on a scale not seen in decades. Trade wars, real wars, and a general sense of global fragmentation are pushing countries to diversify away from the US dollar. And what are they buying? They're buying gold. The rate at which central banks, particularly in the East, are accumulating gold is staggering. They are preparing for a world that is less reliant on a single currency, a multipolar world where gold plays a much larger role in international finance. This isn't just theory, we are seeing it happen in real time. This institutional buying provides a massive, steady bid under the gold price, making it incredibly resilient. So when you hear about a trillion-dollar apocalypse, it's not about the end of the world. It's about a massive revaluation of assets. It's about money flowing out of overvalued paper assets like certain tech stocks and into undervalued hard assets like silver and gold. The market is starting to question the narrative that has dominated for the last decade. The idea that tech could grow to the sky indefinitely without any connection to the physical economy is being challenged. What we're seeing with silver crushing Nvidia is a symptom of this larger shift. It's a sign that investors are looking for real value, for tangible assets that can weather the coming storm. Think about the ratio between these assets. Historically, the gold to silver ratio has been a key indicator for precious metals investors. For a long time, silver has been historically cheap relative to gold. The recent outperformance suggests this ratio might be starting to normalize, which could mean silver has much, much further to run. Meanwhile, the value of the entire precious metals market is still tiny compared to the stock and bond markets. If even a small fraction of the money currently in stocks and bonds decides to seek safety in gold and silver, the price implications would be explosive. That's the real trillion-dollar shift we're talking about, a reallocation of capital on a historic scale. So, what should you do with this information? This isn't financial advice, but it's crucial to understand the changing landscape. The dominance of a few tech stocks has made many portfolios top-heavy and vulnerable. Diversification is key. And for centuries, the ultimate diversifiers have been gold and silver. They often move inversely to stocks and bonds, providing a crucial buffer during market downturns. The recent performance of silver against a tech champion like Nvidia should be a wake-up call. It's a reminder that no trend lasts forever and that the physical world still matters. A lot. The narrative that gold is just a shiny rock and silver is just for jewelry is outdated and, frankly, dangerous for your portfolio. These are critical strategic assets. Gold is the ultimate monetary insurance policy, a hedge against systemic risk. Silver is a hybrid asset, benefiting from both monetary demand and an explosion in industrial use cases tied to the technologies of the future. The fact that it's outperforming a key AI company shows that the green energy revolution might be just as powerful an investment theme as the AI revolution. In conclusion, the battle between silver and Nvidia is symbolic of a much larger conflict in the financial markets. The physical versus the digital, hard assets versus paper claims, old money versus new tech. While gold calmly holds its crown as the undisputed king of monetary assets, the wild ride of silver is showing us where the cracks in the current system are appearing. The trillion-dollar apocalypse isn't about destruction, it's about revaluation. Yes, about the market rediscovering the timeless value of gold and the critical importance of silver in the 21st century economy. The message is clear. Ignore precious metals at your own peril. The game is changing and you need to be prepared. Thanks for watching today. What do you think? Is this the start of a new commodity supercycle? Let me know your thoughts in the comments below. And if you found this breakdown valuable, make sure to hit that like button and subscribe for more deep dives into the forces shaping our financial world. Stay safe, stay diversified. See you next time.